Welcome to another edition of one of our Money Talks video programs. I'm Jerry Slusiewicz, your host. We're going to try to update these a little bit more frequently. Last year we did them about once a month. I'm going to move that up to about once a week. In addition, what we're starting is this Blog Talk Radio, and we're going to do these our live radio show, and we're going to archive these on the website. So you can go to our website, www.yourmoneytalks.com. Or again, blogtalkradio.com, and we'll start sending out more blasts on these and give you more current updates on a regular basis. And also, we still have our blog and our weekly Next Week on Wall Street podcast that anyone can sign up for. Again, right up above our head here is our sign up tab for our free investment newsletter. All this is free. All this is designed to help educate you, the investor, on our ideas in terms of what we see happening in the market. And we are right a lot on these markets. Today's January 10th, 2012, and the markets are up quite a bit today, all on news about China, how they're going to start lowering interest rates again, and how they're going to try to empower investor standards that protect the investor over there. Well, why is that important to us in the United States? Well, China is the second largest economy in the globe, and their markets are down considerably, double digits. They were down almost 40% on the Shanghai index last year from the high in November 2010. And believe me, they're the supplier of goods to the world. Watching those markets have a very direct correlation to what's going on in Europe and the United States. You can say, well, I can just watch them. Well, yes, but it's important to watch the pieces and how they interact and how they work together to really get the opinion. Now, my point is that what we try to do is get the information better and faster to you as an investor. Now, we do manage money. For those of you who are doing it yourself, this is all great information. For those of you who are trying to find out if my services are right for you, this is great information to evaluate our services and our thought process. The thing that you need to understand that's most important is that we are risk managers first and foremost. While we all want to make money, get rich as quickly as possible, and be greedy and make money, that isn't the first goal. The first goal for all professional money managers is to protect your money, protect what you already have, and then try to grow it. Now, that doesn't mean we're conservative or too conservative. It means that we manage the risk and we take appropriate risk versus just rolling the dice and seeing what happens. So again, we're going to try to update these more often. We're going to have the Blog Talk Radio as well programs, and Next Week on Wall Street, our normal Friday, probably 48 weeks out of the year podcast is still going to be delivered. So sign up for our free email newsletter, www.yourmoneytalks.com. That's our website. Now, as far as the market is concerned, last year, at the end of the year, it was a bull market one day, bear market the next day, bull market one day, and what we saw was a series of lower highs and higher lows. We have now broken out of that trend, and the markets have moved to the upside. With that said, we've moved quite a bit, pretty far, pretty fast, since the week before the Christmas holiday. What happened then was when the European Central Bank, the ECB, announced that they're going to lend money to their constituent banks based on any kind of collateral they gave them at 1%. And those rates we anticipate are going to go lower. So they're borrowing money at low rates, buying sovereign debt bonds at, let's say, 7% for Italian bonds. The banks are making that 6% spread, using that bond as collateral to get more money from the European Central Bank. It helps the bankers to repair their balance sheets, and it helps the sovereigns, countries like Italy, Spain, Greece, etc., to sell their bonds. We think that's a distinct change in the market. Just like our quantitative easing programs that we've had 2 of so far, during those programs, the markets were able to run up pretty good. So I think last year's highs are going to be challenged, and I think we can even go higher trying to challenge the 2007 or the market of 2000 highs, which is about 20% higher than where we are today. I think that's all going to happen in the first half of the year. Now, it's not going to go straight up. Things pull back a little bit. The American Institution of Individual Investors, AAII numbers, are very, very bullish now. People have turned bullish very quickly. Very few bears out there. That bodes watching. If you're not in, I would wait for a little bit of a pullback and maybe there'll be some better prices to get in and get even longer than whatever positions you are today. It's very important to manage the risk in your portfolio. If you need help doing that, call me, Jerry Salusowicz, 800-449-9501. That's 800-449-9501. And again, sign up for our free information. We are right a lot. And again, when we're wrong, we use stop losses to protect ourselves. Our views on the market are things that usually are not mainstream until sometimes a day, 2 days, or sometimes even a week or 2 weeks after we come up with it through our diligent analysis. Again, 800-449-9501 or on the web at www.yourmoneytalks.com. Tune in again next week because we're going to update these things more frequently for another edition, a video edition of Money Talks with me, Jerry Salusowicz.